It is 9:09 a.m. Pacific Daylight Time. It is the 8th day of May, 2025. This is episode 1091 of Bitcoin, and we're at $100,000 again. We'll see how long we can hold it. Apparently, everybody's all jitty about Trump and China's trade deal, and we're not sure exactly what's going to happen. But from what I understand, it's going to be the best deal because, you know, we make the best deals. It's going to be a great deal. It's going to be an awesome deal. Let's just wait and see if it actually happens before we start, you know, jerking each other around, man. It's just the whole, just be careful out there, right? Here's what, in my experience, here is what has happened over the past few years. People get really depressed, and any amount of good news, and this is not just Bitcoin, this is legacy markets as well, because shit is so off the hook that people across from retail all the way up into institutional will just grab for straws like a drowning man trying to stand on the shoulders of another drowning man, even though all you're going to do is you're still going to die. And I'm not saying don't be happy. I'm just saying be cautious, man. Don't start doing things like, okay, this is when I max out my credit cards to go buy Bitcoin. This is the day that I call the bank and get that fourth mortgage on my 4 houses, you know, so I can buy Bitcoin. Please just lock it down, man. Lock your shit down. Be careful. Take a deep breath and realize you don't have to time tops and bottoms. Okay? Please, for the love of God. I've been here many times. I see how things can turn very, very quickly. Do not let hubris, do not let excitement, do not let emotion dictate your actions in the next few days, specifically in the next few hours, right? That's where people really make mistakes. They start picking up phones, they start making calls, they start doing things that they can't get out of instead of taking a deep breath, meditating a little bit. I don't know, go take a walk, whatever. We've got news. The Office of the Comptroller of the Currency, the OCC in the United States, they themselves have said that banks can handle cryptocurrency for customers and you can outsource it too. Vince D'Aquino from Decrypt kicks us off. The Office of the Comptroller of the Currency has given a nod to national U.S. banks that it oversees, allowing them to buy, sell, and manage crypto assets under their custody. National banks may do so at their customers' direction and are permitted to outsource crypto custody and execution services. An interpretive letter issued Wednesday by Acting Comptroller of the Currency Rodney Hood reads, the OCC's affirmation follows coordinated action across regulatory agencies, signaling a broader recalibration of the Trump administration's approach to digital assets. 2 weeks ago, the Federal Reserve, along with the Federal Deposit Insurance Corporation, withdrew supervisory letters that had required banks to obtain prior consent before engaging with crypto, effectively ending, quote, choke point practices that have hindered and marred the crypto industry's reputation. With its new directive, the OCC builds on Interpretive Letter 1170, which in July of 2020 initially established banks' authority to provide crypto custody. Banks could offer and provide cryptocurrency custody services, including holding the unique cryptographic keys associated with cryptocurrency, the OCC wrote at the time, characterizing such activities as a modern form of traditional banking. But that early openness was later tempered. In 2021 and 2022, under a new administration, the OCC, alongside the Federal Reserve and FDIC, issued guidance requiring banks to obtain written supervisory non-objection before engaging in crypto-related activities, effectively stalling institutional adoption. That policy has now effectively been reversed completely with the OCC's latest guidance. It comes as some traditional banks seek crypto market entry without building infrastructure from scratch, even as critics like President Donald Trump's son Eric see some anti-crypto banks as broken, slow, and expensive. The OCC's latest affirmation, meanwhile, follows Interpretive Letter 1183 from earlier in March, in which the office reaffirmed crypto asset custody, distributed ledger, and stablecoin activities as, quote, permissible. At the time, the OCC tagged those three sections as crypto asset activities and noted that banks could develop and engage with them as long as they are consistent with sound risk management practices. Later that month, FDIC followed suit with acting chairman Travis Hill stating the move shows it is turning the page on the flawed approach of the past 3 years. So what does it mean? Okay, the OCC was pretty much the last stopgap between the banks being able to embrace what's going on, because before there was a couple like, you know, the FDIC kind of like went hands off, the Trump administration went hands off. There were a couple of agencies that told banks directly, we're done with the prosecutorial phase of regulation. You can go ahead and do the thing. And the banks did what? Not very many of them, almost none of them actually took the bait. Now, I shouldn't call it bait, but they didn't do the thing, right? They didn't start, they didn't start cranking up services. They didn't go to the advertising agencies and say, hey, make the commercial for Wells Fargo to be aired at the latest basketball game or whatever it was. They didn't do any of that. They were still waiting. And I believe that at this point, with the OCC now saying they are effectively hands-off, and yes, you, Wells Fargo, you, Bank of America, you, Federal Credit Union, you can all handle cryptocurrency. Now you're probably going to see more and more banks actually start ginning up commercials, start advertising cryptocurrency holding services, buying services, trading, whatever, right? The OCC, I believe, was the last gatekeeper to say, we're done. You guys do what you want to do. We'll have to see if the banks actually do it, because it may not be in their modeling. It may not be part of their revenue model. It may not be part of what they want to get into, but some will. And those that prove themselves to be very effective at it and start making a boatload of money at it, if they do, then you're going to see the floodgates open. So here's what I'm saying. Don't expect this, even though this is one of the last gatekeepers that there is, do not expect everybody to automatically start saying, hey, we're in. I mean, it could happen. I'm just not expecting it. Meanwhile, down in Texas, where the Texas House Committee has passed the Bitcoin Reserve Bill, and it's going to a full floor vote. Braden Lindria from Cointelegraph. A Texas House Committee has passed a Republican-backed bill to create a Bitcoin reserve, which now only needs a successful full floor vote before heading to the governor's desk. The Texas House Committee on Delivery and Government Efficiency passed Senate Bill 21 with no amendments on May the 7th in a 9-4 vote along party lines. The bill has already passed the Texas Senate in a 25-5 vote on March the 6th. SB 21 would establish the Strategic Texas Bitcoin Reserve controlled by the state's comptroller, currently Glenn Hegar, who would be permitted to invest in digital assets that have obtained a market cap of at least $500 billion over the last 12 months, which would currently only include Bitcoin. Republican Senator Charles Schwertner initially introduced SB 21 back in January as a Bitcoin-only bill. However, the bill was refiled to include the potential inclusion of shitcoins in February. Bitcoin Law's founder Julian Farrar said on Twitter that the fate of SB 21 should be determined before June the 2nd, when the Texas legislature adjourns. If the bill sees a successful full floor vote, it would head automatically to Governor Greg Abbott's desk. Abbott expressed his desire to make Texas the crypto capital of the United States back in November and accepted Bitcoin donations as part of his campaign in 2014. Oh, wow, I did not know that. That's interesting. The Texas vote comes the same day as Arizona Governor Katie Hobbs signed a bill into law that allowed the state to keep unclaimed crypto and establish a Bitcoin and digital asset reserve fund that won't use taxpayer or state funds. And that, in fact, is the very next thing that we have up in the news is the Arizona news. So, Braden Lindria is also writing this, also for Cointelegraph. Arizona governor signs a law for the state to keep unclaimed crypto. Arizona Governor Katie Hobbs has signed a law allowing the state to claim ownership of digital assets that have been abandoned for at least 3 years. Before we get into the rest of this, I'm just going to say that this is a nothing burger. This was Katie throwing some kind of bone. The real meat and potatoes bill that she could have passed by signing it into law was the one that she vetoed. This one is full of shit. That's what this is. Arizona Governor Katie Hobbs has signed a bill into law, allowing the state to keep unclaimed crypto and establish a Bitcoin reserve fund that won't use any taxpayer money. Hobbs signed House Bill 2749 into law on May the 7th, which now allows Arizona to claim ownership of abandoned digital assets if the owner fails to respond to communications within 3 years. The state's custodians can stake the crypto to earn rewards or receive airdrops. Jesus, it's like they vetoed the one Bitcoin bill and then passed the shitcoin bill. This is nothing. And people were really excited that, oh my God, Katie Hobbs finally came through after she vetoed the first bill. No, this is crap. I'm sorry, but it is. It's just garbage. This is a nothing bill. This is to get votes. It's going to do nothing. It's going to result in nothing. It's going to not make Arizona any money whatsoever. It's not going to increase their wealth at all because it's just going to be a stagnant law on their books. Because, I mean, can you imagine receiving airdrops as a United States state? It's embarrassing when shitcoiners do it. For God's sakes, but they're going to be able to stake the crypto and earn rewards or receive airdrops, which can then be deposited into what Arizona has called a Bitcoin and digital asset reserve fund. Quote, this law ensures Arizona doesn't leave value sitting on the table and puts us in a position to lead the country in how we secure, manage, and ultimately benefit from abandoned digital currency, the bill's sponsor, Jeff Weninger, said in a May 7th statement. Quote, we've built a structure that protects property rights, respects ownership, and gives the state tools to account for a new category of value in the economy, Weninger said. On May the 3rd, Hobbs vetoed a similar Bitcoin reserve bill, Senate Bill 1025, which would have allowed the state to invest seized funds into Bitcoin, citing concerns over using public funds for, quote, untested assets. Bitcoin Laws founder Julian Farrar said on Twitter that Hobbs signing HB 2749 offers more hope that she may also sign Senate Bill 1373, which is currently on her desk. Now, that bill, SB 1373, would authorize Arizona's treasurer, currently Kimberly Yee, to allocate up to 10% of Arizona's budget stabilization fund into Bitcoin. The bill's passage in Arizona follows New Hampshire Governor Kelly Ayotte on May 6 signing House Bill 302 into law, allowing New Hampshire state treasury to use funds to invest in cryptocurrencies with a market capitalization of more than $500 billion, and Bitcoin is currently the only cryptocurrency that meets that threshold. Okay, so first of all, unclaimed digital assets. What in the hell does that even mean? on the surface, you can say, well, it means unclaimed digital assets. How do you know it's unclaimed? Who's holding it that knows that I haven't claimed it? What are you talking about? What exactly do you mean by unclaimed digital assets? So what? I get is Arizona planning on cutting some kind of Bitcoin payment to some of its citizenry as, like, let's say, a tax refund? And if for whatever reason, how do you know that goes unclaimed? It's not a pull system, it's a push system. If for whatever reason, like, for instance, if I've given the state of Arizona as a taxpayer a Bitcoin address and they say, hey, you've got a refund, do you want it in Bitcoin? And I say yes, and they push the Bitcoin to my wallet, I mean, I can't stop that from happening. That's the way Bitcoin works. So now all of a sudden Bitcoin ends up in my wallet. What are they going to do? Are they going to look at it, day after day after day and then say, okay, well, it's been 90 days. You haven't actually called us up and said that you've taken ownership of it, even though it's clearly in your wallet. It's a push system and not a pull system. So you have it. So we're going to take it back. Well, again, Bitcoin doesn't work that way. So somebody, please tell me what the hell this chick is doing. What was this bill all about? Unclaimed digital assets? What the hell does that even mean? And second, Julian Farrar, the Bitcoin Laws founder, saying that this offers hope that she will sign a bill that will allocate up to 10% of Arizona's budget stabilization fund into Bitcoin. No, she already vetoed the bill that would have allowed even seized funds to be used to buy Bitcoin. She is probably not going to sign SB 1373 unless she gets so much pushback from the bill that she did veto that she feels that she might lose governor. She might get she might get primaried. I don't even know if she's up to be, like, if she's running for governor next term or what. I honestly don't give a shit what happens in Arizona. The people are fine. I'm just saying that your governor is a complete fucking moron. And many governors are. You do not have, the Arizonans do not have the only idiot governor that there is. In either event, I have very little hope that somebody who vetoed the bill that she vetoed, that she would then turn around and then pass SB 1373, because that's too close. That's actually even closer to the fire of using public funds for quote unquote untested assets. In her opinion, Bitcoin is an untested asset. She's not going to let Arizona's budget stabilization fund invest into Bitcoin at a rate of anywhere close to 10%, if at all, because I think she's going to veto that one too. I'm just saying. But Missouri did a thing. The state of Missouri in the United States just did a thing. Their House has passed a bill to exempt Bitcoin from capital gains taxes. All right. So Missouri seems to be knowing what they're doing. But again, that's going to have to go to the governor. So the question to ask is the Missouri governor a complete moron, or is the Missouri governor above board? I guess we'll find out. I don't even know if this bill has to go to the Senate first. All of it. See, here's what I'm begging for people like Pete Rizzo, the Bitcoin historian, because he's the one that put this tweet out on Twitter. Right? He says, just in. Missouri House passes bill to exempt Bitcoin from capital gains taxes. This is the way. Could you do me a favor, Pete? And when you make statements like this, could you tell me, does it need to go to the Senate? And how many committees does it have to go to in the Senate before it goes to a Senate full floor vote? If it does go to a full floor vote, when do you think that might happen? Is there anything else in a way before it goes to the governor's desk for signing? Nobody has been really clear on exactly what bills are in what state. And yes, I could go to Bitcoin laws and all that, but when we're reading these news stories, there's always something lacking. Like, I could have sworn to God that both of the Texas bills that represented Bitcoin strategic reserve bills had been passed by the House and the Senate, and they were both on the way to the governor's desk. And now I find out that that's not exactly true. So please, because our state legislature stuff is so freakishly convoluted, is there any way that we could have stories that basically say, okay, X bill has passed this committee. Its next committee is this. And then after that, it will go here and here and here and here and here and here. And we're on this step number 3. We've got 19 steps, and they're all laid out, and we'll keep track of them for you. Please, for the love of God, do that. And meanwhile, I'll run the numbers for you. Futures and commodities, whoop-de-doody-doo, and we have a new pope. White smoke has spilled out of the chimney at the Vatican. Just now, it's breaking news. We still don't know who the new pope is going to be. I'm sure they will announce that later on in the day. But meanwhile, oil is also up in the green today because of the Trump-China tariff trade talks. It's up $2.84. West Texas Intermediate coming in at 59.73. Brent North Sea is up 2.5 to 62.68. Natural gas is down 2 points to $3.50. Gasoline is up 2.5 points to $2.08. Gold is down 2 1/3 to 33.12 and 3 dimes. Silver is down 0.5. Platinum moving sideways. Copper is down 2. Palladium, however, is up 0.17%. Ag is pretty much fully mixed. The biggest winner today is sugar, 2 points to the upside. Biggest loser, wheat, 1.5 to the downside. I got live cattle up 0.5. Lean hogs down 1/5 of a point, and feeder cattle are up almost 0.5. All your legacy equity markets are raging bulls right now. Dow is up 1 1/3. S&P is up 1 1/3. NASDAQ is up 1 2/3. And the S&P Mini is up 1 3/4 points. Bitcoin is also up. As I said, $100,800 is exactly a $2 trillion market cap. And we can purchase 30.4 ounces of shiny metal rocks with our one Bitcoin, of which there are 19,861,794.61 of. And average fees per block are low, 0.04 BTC. Taken in fees on a per block basis. There are 10 blocks carrying 3,000 unconfirmed transactions waiting to clear at high priority rates of 3 Satoshis per VByte. Low priority is going to get you in also at 3 Satoshis per VByte. We've got 925.3 exahashes per second as a hash rate. So there is no miner capitulation. In fact, hash rate is rising and looks to be a 6.87% increase in difficulty coming around April the 12th. Wow, we must be mining blocks fairly quickly. Average block times are 9.4 minutes right now. And from Trump Hump Day, yesterday's episode of Bitcoin and I got Axelrod double aught with 1,021 sats. Says, thumbs up for the thumbs up news. It's a pleasure to listen to you read these poorly worded sentences littered throughout BTC Newscape like a slow-moving grammatical train wreck. Keep up the good work and disdain for bad grammar. Cheers. I hear you, brother. Turkey with 500 says nothing. TKCTV 80 HPW with 500 says psychuck. Ooh, shots fired, brother. Chill Now with 444 sats says, Ep, 1090, realigns moral coding, miners unplugged wells, give breadcrumb trails to agenda reveals, surface.logic semi-sentient, wallet app floats on borrowed ships of usury, signal loop, infinite reflection, strategy of debt pivots with enshittification of AI, neural.fabric auto-adaptive, all virtual dreams, creation of some tech scheme, reality twisted and bent, status online, Will to resist recalibrated. I need a new passive-aggressive income end signal. Yodel with 444 says, FYI, I believe the company loan minimum is in fact lower at $10,000, having watched Jack's original video. What Yodel's talking about is the strike limits on how much you can take your new strike loans against Bitcoin for. So Yodel is saying that having watched Jack Maller's original video, company loans or business loans can go as low as 10,000. And the other lower limit was 75,000. So I guess it's if you want to take a personal loan on your Bitcoin, you have to do 75 grand. But if you have a business and you want to take a business loan, you can do 10,000. I still highly caution and recommend patience. Patience. Do you really need the loan? If you do, can you really do the thing that's going to be able to make the payments to pay back the loan, or at least service the loan, so that you don't have your Bitcoin liquidated out from underneath you? And this is these are about the strike loans, Jack Maller's company strike. So I'm just saying caution. I'm not saying we hate him. I'm not saying we should hate him. I don't. I really like Jack. I'm just saying be cautious. When collateral that is your Bitcoin is put up for fiat cash, you better have a good reason for doing that and not just because you can. All right, so please just be careful. Permanerd with 256 says, thank you, sir. No, thank you. And that's the weather report. Welcome to part 2 of the news that you can use. First one out of the bag for this half of the show is Stripe unveiling payment products powered by Gale Force Tailwind stablecoins. I don't think it's actually, that's the brand name of the stablecoin. I think they're just saying stablecoins are a Gale Force Tailwind, and we'll find out more from Jamie Crawley, writing for CoinDesk. Stripe is ramping up its stablecoin capabilities, expanding the provision for businesses to receive and hold payments on cryptocurrency rails. Following on from Stripe's acquisition of stablecoin platform named Bridge, the San Francisco-based payment giant has unveiled a new money management service powered by stablecoin. Just the whole reason I'm reading you this is because stablecoin. I keep telling you to watch out for this. Stablecoin financial accounts will enable businesses to hold a balance in stablecoins and distribute them anywhere in the world, according to Stripe, as announced on Thursday. At its annual event Sessions, CEO Patrick Collison described stablecoins along with artificial intelligence as not one but two Gale Force tailwinds well off the Beaufort scale, dramatically reshaping the economic landscape around us. Quote, we're building programmable financial services to make money as easy to manipulate and manage with code as data is, said Will Gabrick, Stripe's president and product of business. Stripe recently said that it was preparing a new stablecoin payments pilot aimed at companies based outside of the United States, the United Kingdom, and the European Union. Free from the volatility that remains inherent to cryptocurrencies like BTC, stablecoins have been flagged as, quote, a potential breakout use case for blockchain technology. It's not a blockchain, guys. Most stablecoins are not actual blockchains. They're just ledgers. Whatever. Citi predicted that the sector could grow to a 3.7 trillion, that's trillion with a T, market cap by 2030, which would constitute a 15-fold growth from its current market cap of around a mere $242 billion. So what does this mean? Stripe is getting into the stablecoin game as well. And here's what I predict. They will actually spin up their own stablecoin, just like everybody's going to spin up their own stablecoin. You know, and this actually reminds me of what happened after, you know, like right around, there was a couple of times during the United States early history, after the Revolutionary War, a lot of the states had their own, like a lot of the states and then banks inside the states had their own currency. There was not a federal United States dollar, not at that time. And then around Civil War times, we had a similar issue where there were several different kinds of, for lack of a better term, private, non-state issued or state issued, but certainly not federally issued, at least in the southern states during the Civil War times, currencies. So is it the fact that several different private types of currencies automatically spin up around the human condition when things in the market are just incredibly confusing? I mean, because this seems very, very similar to right after the American Revolution and the American Civil War. And I know it's happened in the rest of the world as well at various times, but these are the two things that I know about the most. So it just seems that this is sort of a theme, that when markets get weird or things around you get so unpredictable that you just say, fuck it, let's have our own money. Be very, very careful about this stablecoin thing. And I know I harp on it all the time, and I'm going to beat that dead horse with as big of a stick as I can to make sure that anybody who's new to this show understands. Be careful about stablecoins. Do not engage in ICO chicanery or altcoin chicanery or shitcoin chicanery. It's that kind of mental thinking that is going to start the spinning up of hundreds, if not thousands, if not tens of thousands of stable coins. It's going to be that same bullshit. It makes me feel dirty and I need to get clean, and I'm going to do it with SoapMiner handmade tallow soaps. Circle P is open for business. The Circle P is where I bring plebs with goods and services just like you to plebs just like you who want to buy goods and services. And in this case, it's handmade 100% beef tallow soap. In most of these, there is maybe 4 or 5 ingredients. There's cedarwood. There's peppermint tallow soap. There's lavender tallow soap. There's pine tar tallow soap. And then my favorite is just rough cut tallow. It's got 3 ingredients: 100% beef tallow, lye, and distilled water. That's it. It's one of the best soaps I've ever used. My children like it. My wife likes it. And guys, any of you guys out there who are married, when your wife likes a soap, that's probably a soap that's worthwhile. Okay, I'm just saying. Whenever I use this soap, I mean, the skin is squeaky clean, and it doesn't take long to do either. It's like bam, 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 rub your hands together a few times, rinse it off, and all of a sudden, all the dirt is gone. So if you feel grubby having to listen to me talk about stablecoins, then you need to get SoapMiner soaps. You go to SoapMiner.com. That's SoapMiner.com. Use Bitcoin and for a 10% off of your entire cart, and you put that coupon code into the coupon code box when you go to your cart at SoapMiner.com. Get all of his soaps. He's got like 7 or 8 completely different flavors of soap. All of them are worth your money and worth your time. Again, SoapMiner.com. Use Bitcoin and for 10% off. Now, the Superstate unveils opening bell to bring SEC registered equities on chain, starting with Solana. I'm not touting Solana. I'm trying to read you stories of where I think things are going, whether they're good or bad. This is probably not great, but Jason Shubnell will pretty much line us out here from the block. Superstate, known for its suite of tokenized private funds, including USTB and USCC, is now extending its infrastructure to public equities, like stocks, right? That's what they're talking about. The fintech firm on Wednesday announced the launch of, quote, Opening Bell, a platform that enables SEC-registered public equities to be issued and traded directly on blockchain networks and they're starting with Solana. Opening Bell supports natively issued, regulatory compliant shares that interact directly with crypto wallets, DeFi protocols, and on-chain marketplaces. What could possibly frickin' go wrong, according to a release shared with the block? The platform eliminates reliance on centralized exchanges and legacy listing mechanisms, offering continuous trading and real-time settlement via blockchain-native infrastructures. Quote, through Opening Bell, stock will become fully transferable, programmable, and integrated into DeFi, Superstate CEO Robert Leshner said in the release. Quote, this is about re-engineering public markets for the modern financial stack. End quote. Oh boy. While several companies and projects are working on bridging public equities with blockchain infrastructures, Opening Bell appears to be the first to offer direct issuance and trading of SEC-registered public shares on chain rather than synthetic or wrapped versions. In a letter last month to the United States Securities and Exchange Commission's Crypto Task Force, Superstate was among several firms to propose an SEC-backed framework to bring Wall Street stocks to the blockchain. Yay, we're going to the blockchain. SOL Strategies, a Canadian public company focused on investing and building infrastructure for the Solana ecosystem, will be the first to list its common shares on Solana via Opening Bell. The firm had previously initiated a process to uplist to NASDAQ and now aims to establish a dual market presence. Sol Strategies rebranded last year from Cypherpunk Holdings. As of March 31st, Sol Strategies held, some amount of their shitcoin, whatever it was. Quote, listing Sol Strategy shares on Opening Bell reflects our conviction that the future of capital formation lies in programmable, open infrastructure powered by shitcoin number 3. Leah Wald, CEO of Sol Strategies, said in the release. Quote, this approach enables 24/7 trading, instant settlement, and global access with deep liquidity, exactly what today's modern investors expect. Put a tie on that suit speak, lady. Opening Bell is now onboarding both existing public companies and late-stage private firms, particularly those from crypto-native, venture-backed, and traditional sectors. So there you go, equities on the blockchain. Thankfully, they're going to start with shitcoin company equities, like this Sol Technologies or whatever the hell it was. So you'll have to wait for Chevron to get on the blockchain, but it's going to happen, and that's going to end up being quite a problem for New York Stock Exchange, NASDAQ, S&P 500. Well, not S&P, but I mean the NASDAQ exchange, and the New York Stock Exchange and Chicago. I mean I think that even Texas is getting their own kind of stock exchange. All of these things are in danger because of this. It doesn't mean that it's good. I'm actually not advocating for this. A 24/7 market of everything may be a bad idea. I don't know. And then we've got to start talking about circuit breakers. If this is really going to be decentralized finance, are there going to be circuit breakers? And if they are, how are they designed? Who designs them? And who can throw the circuit breaker? Now, that's just one issue here. And 24/7 trading, especially for people that actually trade for a living, what's that going to do to their sleep? Could you imagine having to go to sleep when you know shit's trading 24/7? Yeah, in a very real way, that's already done. But at least they have the weekend to catch up on sleep. Not anymore. No. Hell no. We're going full bore, ladies and gentlemen. We're going to be trading every second of every minute of every hour of every day on weekends, on holidays. I mean, leap years. We'll be trading in days that even don't freaking exist. I'm not sure that this is the best idea, but it is coming, so just be prepared. Finally, for today, I realize this is a short show, but honestly, after $100,000 Bitcoin, really wasn't much more that people were talking about, and I just didn't want to harp on it because it is what it is. Cointelegraph, Helen Parts, Coinbase is going to acquire options trading platform Deribit for almost $3 billion. Deribit's been around for a while, and now they're getting bought, dude. Coinbase, largest cryptocurrency exchange in the U.S. by trading volume, has agreed to acquire Deribit, one of the world's biggest crypto derivatives trading platforms. What could possibly go wrong? Coinbase Global will acquire them for about $3 billion. The acquisition will allow Coinbase to expand into the profitable crypto derivatives market. Oh, yay. And continue scaling the platform's global growth. Greg Tussar, Coinbase's vice president of institutional product, said in an announcement, quote, with Deribit's strong presence and professional client base, Coinbase is making its most substantial move yet to accelerate our international growth strategies. And following the deal's success, expected later in 2025, Deribit founders John and Marius Jensen will step away from the firm because they have taken all their money. Their exit would mark the end of the joint venture that began in 2014, Deribit said in a statement. Until the deal is closed later this year, pending regulatory approvals, Deribit will continue with business as usual. Quote, same platform, same team, same commitment to excellence in derivatives, the announcement noted. Oh, God. We're excited to join forces with Coinbase to power a new era in global crypto derivatives, Deribit CEO Luc Strijers said, adding, quote, as the leading crypto options platform, we've built a strong, profitable business, and this acquisition will accelerate the foundation we laid while providing traders with even more opportunities across spot, futures, perpetuals, and options, all under one trusted brand, end quote. God, the suit speak. It's all over the place. The announcement also mentioned that integrating Deribit's technology with Coinbase's products will enable more efficient onboarding, enhanced fiat rails, and capital efficiency across the entire trading lifecycle. You mean you can steal from people 24/7 because they're fucking ignorant, and you're preying on that like the vultures that you are. But continuing, the $2.9 billion deal includes $700 million in cash and 11 million shares of Coinbase Class A common stock. Quote, this transaction is subject to regulatory approvals, the announcement said. Previous reports in March suggested that Coinbase and Deribit had alerted regulators in Dubai about the potential deal as Deribit holds a license there, which would need to be transferred to Coinbase if the deal is successful. The report also previously suggested that a deal with Coinbase could value Deribit at between $4 billion and $5 billion. Coinbase's Deribit acquisition marks a growing trend of large acquisitions in the cryptocurrency market. On May the 1st, rival exchange Kraken officially announced it was finalizing the acquisition of another derivatives trading platform called NinjaTrader so that they can offer futures trading. Kraken previously said it entered into an agreement to acquire NinjaTrader for $1.5 billion, subject to certain price adjustments. So consolidation in the suit world when it comes to Bitcoin and cryptocurrency is occurring. It will not stop. It's going to get ugly. It's not a good situation. Stay away from all of these companies. Coinbase has never been on Bitcoin's side. Kraken, there used to be a time when Jesse Powell, the guy that started that, was a solid Bitcoiner, but he stepped away from the company, and now Kraken is just a pure straight up shitcoin exchange, just like Coinbase is. None of these companies are worth your salt. If you have any Bitcoin on either one of these things, please, for the love of God, get them off. All right, so that's it for the day. Episode 1091 is in the bag. What are we looking at? We're looking at $101,375 on a Bitcoin. Not much else to say. We'll see what Trump does. We'll see what this announcement is. Who knows? Maybe it'll be good. I don't know. I just don't. I hope it is. I mean, I hope we can get back to doing what we've been doing. But there's a problem with that. we all know that the system is broke. That's not a lie. You know it as much as I do. And here was the deal, is that everybody, we got Orange Man in. And we rah, 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 rah. But even those people, I saw them. I saw what happened. Even the people that were like some of the biggest cheerleaders for Orange Man getting into office, 100 days of looking at their portfolio, well, maybe not 100 days. We'll say 35, we'll say a month. And sure, that is way short term, but they're looking at the portfolios, and it was at one point or another, a lot of people were down by 20% in their retirement accounts, their investment accounts, across the board, 20% down. And it just stays there. It doesn't move. All the energy companies are just basically getting beat up around the head and shoulders with low energy prices. Right? It's like a lot of people are hurting in a lot of different ways. Right? Everybody is basically getting beat up financially. It doesn't take long for the cheerleaders of Orange Man to start turning tail and going, wait a minute, I didn't expect it to be this bad for this long, even though it's only a month. Right? Now the smart money is on waiting it out. That's always the case, no matter who the hell does what, where. You just be patient. But it's hard to do that when you see that you're 20% down and you're close to retirement age or something like that. So you're going to start doing the whole turncoat thing. We have to see what the hell Orange Man and Xi come up with. We have to see if there's any other deals on the table from all these other countries. We have to see what the announcement is actually going to be. So until we get a firm feel of what the hell's going to happen, please understand that just because they put a Band-Aid over this thing and the portfolios go back up to where they were and people breathe a sigh of relief does not mean that the underlying problem that's fucking up the financial markets and has been since 1971 isn't still present. It is. We're printing money like it's going out of style, and it ain't just the U.S. You got derivatives of derivatives of derivatives that basically somehow or another affect the bet on the bet on the bet on the bet is now somehow so powerful that it affects the roll of the fucking dice. Right? And that's in meat markets, that's in any commodity markets, that's in equity markets, that's in money markets, that's in interest markets, you name it. This is a huge casino. And just because we possibly might get a deal with China does not mean that the fundamental aspects of what's broke is automatically fixed. It ain't. It won't be. Only Bitcoin is the way. Bitcoin is the only way out. I'll see you on the other side. This has been Bitcoin and I'm your host, David Bennett. I hope you enjoyed today's episode and hope to see you again real soon. Have a great day.